So this is the reason why lots of persons buy crypto. And we have seen on charts that the adoption in crypto in this country is on a very similar level that the inflation rate.
The following video is an interview together with Christophe, our compliance officer here at Swissborg, discussing inflation at a high level. Feel free to use the timestamp below for your convenience to get to the part that interests you. Without any further ado, here's the interview.
All right. Hello, Alexander. Nice to be here. So, correct, I'm a compliance officer, but before that, I have also spent 10 years in a banking industry. So, I know quite a lot about industry and inflation.
Wonderful. So if we start there, how I think a lot of people might know this, but it's always good to refresh. How is inflation bad? How will it affect us in a negative way?
So inflation is often perceived as a bad thing because what it does, it reduces your purchasing power. What do I mean by that? Imagine that you have $20 for your lunch. Today, maybe you can buy a pizza, you can get a Coke, and the coffee for the dessert. But as inflation goes up, so will the price. So maybe in a couple of years with this $20, you will only be able to get just a pizza and a Coke, but no coffee anymore. That's what it means. Inflation is eroding your purchasing power. With the same amount of money, you can buy less. So in that sense, inflation is bad. And inflation affects not only your purchasing power, but your savings. Imagine that you have this 1,000 francs that sit on your bank account. Right now, after a couple of years, this 1,000 francs will allow you to buy less. So basically, everything's gonna affect all your life. So whenever you have savings, it's important to hedge them against inflation so you don't have negative consequences.
Wonderful. Okay. And how are there any circumstances where inflation can actually be a good thing?
Yes, of course. Inflation, if it's controlled and below a certain level, most of the time the Fed consider that this level is below 2%. It considers that the economy is growing. So that means we're creating wealth, and it's a very positive aspect because whenever you grow, market grow, demand grow, that's a positive sign. That's a proof that the economy is rising.
Okay, yeah, that's good. So there are actually good inflation, but those numbers are usually below 2% and not as high as we're currently seeing.
Exactly. So for me, if, like I said before, if inflation is controlled, this is good. But we would like to try to avoid going in a scenario like you have, for example, in a couple of South American countries like Venezuela, where you have inflations of thousands of percent per years. Because then at some point you might end up going with like a full suitcase to just buy a coffee.
Yeah, it becomes unsustainable at some point.
Definitely.
So how is inflation calculated? Is there a way to clearly see, or how is inflation calculated?
So inflation is calculated basically on a basket. Uh, so whenever for your living expenses, you have, for example, your food, your car, your benzene, your mortgage, your rent, and so on. And all these items are affected by inflation. So whenever inflation goes up, your basket of price will go up. So maybe, like say in 1960, your basket will cost that much. In 2000, your basket will cost another price, and in years so on, it will cost even more. So basically, if you calculate the difference in price between the different basket, you will know the difference and the inflation rate.
Okay,
And
got it.
right now, if you, for example, look in the US, what is the most common one is you look at the CPI, and basically they give you every month what is the inflation. So you can have a very specific numbers, but every country will have a different basket because every person, depending on the country, have a different purchasing habits.
Okay, got it. What does inflation mean to you?
For me, honestly, I think some inflation is good, as we say, because that means that the economy is growing. But inflation need to be controlled, and not like in the way like for example, if we look at Venezuela, where they have inflation of thousands percent. If you look at the Venezuelan bolivar, it's sometimes you need, for example, a suitcase to just buy a coffee, and this is definitely a sustainable model because You earn some money, and the next couple of weeks, you already lose half of this money through inflation. So it's you will see person just like fighting to survive with a weak economy. And right now, I heard that a lot of these person, you know what they do is they try to convert the Venezuelan bolivar into Bitcoin or cryptocurrency because it's a better store of value. Yeah. So right now, the trend is lots of South American country like Venezuela. People will stop using the local currency, like for example Bolivar, but start using crypto like Bitcoin or so on to make the exchanges because it's a much better store of value. Because imagine that you have your salary, and every month it lost 20% or something like this. You will not be able to provide to get food or anything like this if your salary doesn't increase in the same way that the inflation make your purchase decrease. So this is the reason why lots of persons buy crypto, and we have seen on charts that the adoption in crypto in this country is on a very similar level that the inflation rate. So you will have person like McDonald's, Subway, and so on starting accepting crypto because it's a better solution for them. And why do they choose Bitcoin instead of gold? Simple, because Bitcoin is you can have a fraction of a Bitcoin. It's easy to transfer, and it's not like gold. Imagine walking with a lingo of gold in your wallet there, or your purse, or even in your pocket. Doesn't work.
Yeah, completely. So you've touched upon it a little bit, but could you just clarify what inflation means for savings and how inflation can affect savings?
So inflation is the worst thing that can happen to your saving on a certain level. If you keep your cash on a bank account and do nothing, it's the worst thing that you can do. Imagine that you have $1,000 and an inflation rate of 20% per year. After just 1 year, your purchasing power will lose 20%. And imagine that it accumulates over the years. So if you have savings, you need to have at least interest rate or to invest them to be able to cover the inflation rate, so your purchasing power will stay the same. Otherwise, imagine you will not be able to save to go on holiday, buy a new car, buy a house, or even give anything to your kids if the inflation hits you. So protecting yourself against inflation, for me, is a critical point. And keeping cash on an account when there is a high inflation, I'm sorry to say, it's the worst thing you can do. But if you want to invest, you have to invest wisely.
And just as a follow-up question on that, how do you protect yourself against inflation?
So on that side, for me, I have many ways of protecting myself. So I have Bitcoins and several other cryptos that I consider for me a good edge against inflation. I put them in the yield because so they can earn some money. Then I have some stable coin that earn some yield, but I try to avoid, keeping just like fiat in my account doing nothing. It might be positive on a very short term, but on the longer term, it's definitely gonna eat your capital and your purchasing power.
Yeah. And you've also touched upon this a little bit, but is there a clear who controls inflation?
So inflation can be caused by many ways. It can be caused, for example, right now we know that there is a war in Ukraine. So obviously, this will increase the price of the goods because, for example, energy will go up because of the war. For example, a couple of agricultural goods will go up because of the war. So if this price go up, basically your basket goes up, and that will create inflation. Another also person who control inflation would be the Federal Reserve with the interest rate. And after that, you have different aspects of the economy that can affect inflation. For example, the shipping cost, because how much it costs to send one good from China to the US. And all these aspects will inflate your daily demands. If at some point, a person decides that we should buy a lot of this, it might drive the price up. And if the price goes up, it will increase inflation. And on the other way, we have to realize that if suddenly the supply of a certain product is very important, it might drive the price down. and inflation can go down as well. So
That actually
inflation is
leads me to my next question. So some people wonder, will inflation go down, and when, and what would be factors affecting that?
So inflation have been going down a lot. And for example, if we look at the COVID situation, right now everybody was stuck at home, doing no purchase, doing nothing, and this has driven a lot of price down. They have driven the economy down because people were not consuming, because they were staying home, they were not going to restaurants and so on. So these have driven the price down, and this is why afterwards the government has to stimulate it and to incentivize person to consume, and that's why sometimes, for example, if you look in Europe, you have negative interest rate, and why did they do that? It was to kind of force the you and me to consume, because if you keep money on your bank account and you have a negative interest rate, you lose money. So at some point you say, okay, I have either to invest it or to use it.
How does inflation affect the stock market?
So if we look historically on the stock market, you will see that every time the Fed has increased the interest rate, you will see the market going down. Obviously, there is some kind of pricing into that. Inflation can also affect your portfolio and your savings. So, for example, every time that the Federal Reserve announces for a rate hike, that means an increase in the interest rate, you will see the stock market going down. And the reason for that is that there is a strong correlation with the economy, because if you increase the interest rate, you people will start borrowing, will do less borrowing, less spending, which will have a negative impact on the economy. So this is why the stock price goes down. And on the opposite way, when you see the Federal Reserve lowering the interest rate, you will start having the economy going up. You will have, for example, also the crypto market going up. And if you look in the past, whenever there was a general trend up for the federal moving the price up, you will have seen the price of the market and the price of the crypto going down. And whenever you have the Fed having a policy where they tend to lower the interest rate, you will see the market going up and then the crypto going up.
Wonderful. Thank you so much for your time and for answering these questions, Christoph. I think that's it for today.
That was a pleasure. Thanks, Alexander.